Okay, Pride, we're live. Welcome everybody to Wall Street Reporter's next Super Stock live stream, February 17th, 2021. I am back with Skylight Health, SHGFF over the counter, SHG on the TSX. Prad, welcome back.
Oh, always glad to be back, Jack.
Over the counter, SHG on the TSX.
Again,
Prad. Okay, Prad. Sorry about that. We had one of the windows open on YouTube, so that's my mistake. Let me start again because we're going to capture this for the video. So this is okay. Welcome everybody to Wall Street Reporter's next Super Stock, a live stream where we bring you those stocks which have that 10x to 100x upside potential. We're back with Skylight Health, SHGFF over the counter, SHG on the TSX Venture. Again, this is a stock that's already up. I think, what are we up? 4x, I believe, since your debut, Prad.
Yeah, something like that. But we got more to go, Jack.
Yeah, you have to really catch up because we have a company right now that's been up 2,000% since October, 20x. So we're raising the bar now. We're looking for that 100x. That's what investors want.
It's a new bar. Yeah.
They need to know. I guess really the takeaway today is going to be, again, it's like, hey, the stock is making new highs, but what is it going to, can this be a $10 or an $18 stock, in the next 18, 24 months? So that's, I guess that's what we want to focus on. So I think the audience, from what I said, they're really looking at three kind of three, not themes, but there's three topics that I think they're interested in. One is obviously the M&A pipeline, what you're doing in terms of acquisitions, because the roll-up story. Number two is what's happening in terms of how are you building out, how are you again driving the organic growth? What are you doing to build out that the infrastructure which can support this this potentially a multi-billion-dollar business? And you announced the key hire. I want to ask you about that. And of course, number three is the the NASDAQ, the NASDAQ deal, the institutional sponsorship that's coming in. So I think a lot of people are going to have questions about that. So let's kind of unpack this. First thing I want to ask is, tell us about today's announcement. You bring on some key hires right now. Who are they? What's their background? What are they going to do for Skylight?
Yeah. So look, we brought on three new key hires in the last week. Jerry Oliphant, Dr. George Fagali, and Paul Koulas. And these are really important hires, for the company. Number one, it's validating to see such experienced, executives at these multi-billion-dollar health networks in the U.S. Coming to sort of chart Skylight's path moving forward. And it's been an exceptional sort of onboarding and interview and recruitment process, largely because we get a chance to talk about what Skylight is going to look to do, and you see interest and excitement, and there's a million other opportunities for executives with this much experience, and having them join Skylight Health, number one, is hugely validating, because you can see that. While they can hang their hat up with other, call it multi-billion-dollar organizations, they're most excited by the growth prospects with a company like Skylight. Being part of that imminent growth that people look for to be able to really kind of drive change at a much larger scale, and more so excited about what it is we look to do in the U.S. and why it's disruptive, and why they believe that having their experience joining on board at Skylight is ultimately going to result in something that's going to change the dynamics of healthcare delivery across the U.S. So certainly we look at Paul and Jerry, who both sat within senior operational roles. Providence Health, I think, is the fourth largest not-for-profit health system in the U.S. Triact is among one of those. Cleveland Clinics. Dr. George Fagali, he's both working on international projects as well as sitting at CMO levels at the U.S. level. So, having that experience come on board is going to solidify that infrastructure. And we want to become not a $1 billion market cap. We want to become a $1 billion revenue company, so that this becomes a multi-billion-dollar market cap. And that starts with infrastructure, and that's what we committed to in Q1. We're highly acquisitive. But along with acquisition, there's a ton of organic growth opportunities, which I'm happy to talk about some of these kind of early wins that we're already seeing. But it's good to see the foundation strengthening. It's going to continue to strengthen as we go along, but I think it begins with these key players. Okay.
So takeaway is, the goal is, building $1 billion revenue business in the healthcare space, kind of this what everybody's talking about, which is this, the next generation healthcare company, the healthcare, company of the future. I mean, this business is rapidly changing. So, right now you have the infrastructure. So with these hires now, and I think you're probably going to, build out the team more. You're going to do a couple more things, but are you close to having the infrastructure in place to support, a $1 billion enterprise right now?
Yeah, look, I think there's a strong team already. We're already seeing traction and results from organic growth that we're seeing, and that's one of the best things we like about this business model is it's not just buy, it's buy plus grow simultaneously. And there's a good team in place, but you're absolutely right. Look, I think we're very close now to call it the next layer of infrastructure we need. And as we continue to get bigger, and you'll see it quickly with Skylight Health, growth comes fast, and we need to be able to have that infrastructure there so that we're scaling, right? And you don't end up at a point where you need to backfill that infrastructure. So the nice thing about it is there's so many moving pieces, they're all happening simultaneously, and they all fit really well together because we have such a disciplined approach to growing in the US healthcare space. So that level of discipline helps us just stay focused and stay lean, but stay strong.
Okay. So really, I'm getting some echo. Do you have something on your...
Is it still coming through?
Yeah, it might be some internet. Yeah, or not, whatever. Do you have something open on your computer or no?
No, I don't.
No, okay.
I don't hear it on my side.
Yeah, something with the internet. All right.
Let me shift this away from here.
Okay. Oh, it could be speakers. Who knows? All right. So the bottom line is that you have the capabilities now. The company's expanding the capabilities to get to have this $1 billion business. Let's talk about the organic thing, because really the value add, and again, for anybody that's new, maybe I think you should kind of touch upon the business model, which is acquire, but really, take that business to 10x the revenues through kind of your kind of proprietary value add model. So kind of walk us through a snapshot of the business model. What are you doing that's so unique? Because I know all of a sudden you're starting to get some real, U.S. institutional sponsors looking at the stock. So what is it that they're interested? Why do they find Skylight interesting right now?
Yeah. So look, Skylight Health is like, let's start at the beginning, right? Skylight Health is highly, highly acquisitive, right? And we play within a space in the U.S. market today that's largely got very little to no competition, right? We're focused on first of all, a fragmented marketplace. Over 70% of these practices, are independent. Call it mom and pop style medical practices, somewhere between 2 to 10 million, maybe $15 million in revenue. And the traditional acquirers of larger practices need a higher level of EBITDA to support it. And those are private equity groups and play at much higher levels, which, by the way, we're in some of those conversations as well. But when you look at the size here, you're talking about very attractive acquisition multiples of 3 to 5 times EBITDA, where we get the benefit of having a much higher return for shareholders for every dollar spent. Plus, every asset you're buying is immediately profitable, right? It adds immediately to the bottom line because they generate revenues, they have an established patient base, and they generate profits. And that profit can range from like 10% to 15% to 20%. But the nature of these businesses are that, they're all great businesses, but they could be better. And what we do at Skylight is, first of all, having done this for over 20 years, we know exactly where these low-hanging fruit opportunities lie. And so in our model, it's about saying, okay, great, let's be highly acquisitive and capture market share by being able to leverage cheaper forms of currency to go and acquire these practices that today otherwise would have to sell to a hospital system that doesn't end up to be the best outcome for them or their patients. And so we give them a better exit. And then what we do is we bring, business experience, we bring clinical experience, and we just strengthen that foundation. And by doing that alone, you can see, first of all, an EBITDA improvement to a much greater level. We usually look for 20 to 30% contribution per clinic, and that could be greater. And then you look at top line revenue growth, and top line revenue growth can be substantial. Just as an example, within one of the practices we acquired as part of the first tranche of practices we acquired late last year, we've already seen almost a 40% improvement in potential billables within this practice. And it wasn't difficult to get to. All it requires is just coordination, centralization, oversight, and management. And with small tweaks and changes, you can pretty much look to make substantial improvements. The upside on these practices is phenomenal. And in our model, it's about having everybody benefit in that along the way. And so that level of collaboration and cooperation between us and the providers and the clinics just creates more incentive for people wanting to see growth. And this is all before we even look at new services. And when you start to layer on additional services like we're now doing in Washington with remote patient care that we've talked about before, which in its own has a significant revenue stream just with hypertension by itself, you really start to see how growth by way of acquisition, but fueled by organic opportunities, is going to create far greater return for shareholders, especially in a market where we're dealing with so many practices that are going to have to be consolidated at some level. And so this is really call it a window of opportunity. But the reason this resonates really well is you've got other successful stories like this that have demonstrated the return to shareholders, and one of them being GrowGen that we talk a lot about. And again, very similar, highly acquisitive. They're very disciplined in the fact that they focus on specific types of acquisition sizes. Their multiples are on par with it, and they're able to demonstrate that organic growth within each store after acquisition. This is a roadmap that we're not inventing. We're certainly leveraging similar in a healthcare environment, and being able to communicate that to shareholders and U.S. institutional investors that have made a tremendous return. GrowGen's gone from $3 to, I think they passed $60 a share. And so
it's been a 20x already.
Exactly.
And I think you should also mention that. So you're one of your key investors is, the reason they got involved with Skylight is because they had success with this model with GrowGen. So they see you as the GrowGen of healthcare, basically.
Yeah, look, they've been great at picking good companies. Meredith Capital has been a foundational investor in Skylight Health, and they certainly made the introduction to GrowGen. They saw the writing on the wall. They were able to identify that, look, there's a similar roadmap here that has really driven value to shareholders, driven value to the business, and driven value to the overall mission of the company. And now Skylight's looking to do a very similar platform within a healthcare space with just as much fragmentation and limited competition. And so, it makes sense completely to connect the two dots. And look, the GrowGen guys have also become, fundamental investors in Skylight as well. And so, there's a game plan being put together that's not just intended to drive, a capital market strategy. It's intended to create a real business that is ultimately going to drive real long-term value to shareholders. And sure, it's going to come with very aggressive growth along the way. But, we shouldn't look at this as this is just maybe the next year, or maybe there's just a handful of these deals, or maybe Skylight can try and double or triple its value in return. No, I think this is going to be a fundamental growth for the business in a market that has tremendous potential, quite honestly, in a way that's not being executed today by other competitors in the space. And I'm fine with that, because that just means that we as an organization will continue to realize the benefits of those opportunities. So we're certainly really excited by this, and that's partially why we can attract the talent that we're attracting internally in the company. But when we're out there speaking about the business, it resonates, and we're able to prove it with execution that is happening in real time. And so that's, those things all together, I keep saying it's a perfect storm. It's opportunity meets markets. It's a business
market size and the market. So the market. So basically, I think here's the kind of, I think what, and we're going to get into kind of the institutional story, because that's going to be, I think, one of the big catalysts. But really, I think what institutions are going to be attracted to once you're on NASDAQ is, you're going after this massive kind of, let's call it a roll-up of the healthcare space. It's technically a roll-up, and the market is, it's a couple $1 trillion. We talk about how many thousands of these healthcare groups that you can acquire. There's countless.
There's I would say, we're still sizing up some of the markets in certain areas, Jack, but if you look at the practices that are sort of called between $2 to $5 to $10 million in revenue, there's over 20, 30,000 of these practices in the market. I mean, and that's just what we can identify today. And so, and that's before we decide to, expand scope into the larger players.
Right. So there's basically, so it's two things. One is you have this massive kind of roll-up opportunity, right? But the thing that's going to really create value, what the institutions want is they want to see how you're going to how you're going to do the value add, because again, anybody can do that roll-up. You talk about it, but yeah. So you've proven your model that it actually works in increasing significantly by again, the target is 10x, increasing the revenues of these healthcare groups that you acquire. So that's kind of the model. You get the big roll, massive value add, and then you have this. The value is kind of really unleashed. So speaking of which, I want to ask you. Okay, so you're starting to kind of really. You made the announcement that you applied for NASDAQ, right?
Yeah, we did. Sorry, Jack, on that one point, because we're moving on to that, I want to just highlight one other factor that we don't talk about enough, but needs to be discussed as part of this growth is. We don't talk about the value of the data and access, which happens simultaneously with the growth. If we did nothing else but just built this business the way we're building it, this is going to become a $1 billion revenue company. But let's not forget, there are complementary ways that we are strengthening to be able to create parallel revenue streams that are untapped today in our model and are unvalued in our model. Like, to give you an example, we're working on several clinical trial protocols right now alongside the clinics where access to patients is going to be able to yield us real returnable revenue just from a recruitment perspective alone. And these trials can pay anywhere from $500 to $10,000 per patient per trial. And the patients get benefited as well. But us as an organization, this is a low cost, no infrastructure model that happens on the back of a growing platform. So, I just want to highlight that because
it becomes more valuable. It becomes more valuable as you have more, because all of a sudden you have more patient population, exactly. More the data. So we kind of touched upon it a little bit. I know, because I think that could be, like you said, it could be one of the most valuable aspects of the business. It's almost like, I use that analogy of you're buying a cattle ranch in Texas. You have some cattle, but really the value is, the billion barrels of oil that's underneath the ground, assuming you get the mineral rights are included with the ranch. But so basically you're getting the oil. So these so the clinical research stuff, this are you starting to generate revenues from that part of the business, or how?
We have small revenues today that's been done in the past through some trials. We're looking forward to having some further news coming out in the next little bit about the first trial that we might be looking to be working under. And these are with traditional pharmaceutical companies that are running FDA regulated trials in the US, usually phase 3 trials. And so there's a need for large patient recruitment and multiple research sites. And so, the way it works today is you apply for it on a per site basis, but if you land it, you have the ability to get your other sites involved as well, which increases your overall patient intake. So, these are all things that, again, are not a distraction for the company. We are hyper focused on that acquisition and organic growth model, but it takes very little effort to continue to build up these other channels that will ultimately really create a, call it, uncapped opportunity for growth for the company. And that's why this is so exciting, just the virtuous elements of growth that can come out of a disciplined business model, without having to go into 10 or 12 different revenue streams or business types in order to achieve that same kind of success.
You're really building out, as we talked about before, like kind of the flywheel model, sort of like Amazon, as different parts of the business, they add more, the cloud business adds everything, the data adds, the more data they get, the more valuable the e-commerce it becomes a virtuous kind of cycle.
Yeah, but everything flows back to the same team. So it's not like I have to run, a tech business or, a software business, and then I got to go do that business, which has, its own focus and P&L and expenses. This is, everything flows into one. And so the margin allocation per opportunity that you gain is tremendously larger. And that's why I think it's so important to keep highlighting that disciplined approach to just stay in our lane, but at the same time, that lane creates so many opportunities that quite honestly can be unrecognized by many, creates an opportunity where we think, this is where future growth is going to come from.
Okay, we're going to jump into the audience questions in just a second. Obviously, all the questions are NASDAQ acquisitions, So so we'll get to that in a second. But okay, so back to the institutional side, because you applied for NASDAQ, right? So what's the update on that? What's happening there?
So it's moving, and I know many have kind of talked about the backlog and the challenges, and certainly there has been a necessity to continue to keep that process moving. So we actually received our first comment letter back from NASDAQ over the weekend, actually. So we know they're working nights and weekends on that side. And we expect to have, a turn of the first set of responses, later this week. And so it's moving in the direction it should. We have, at this point in time, no reason to doubt that our timing is going to be, imminent in terms of availability for clearance. And along that same process, we're also just as diligent on, the road shows and getting to meet investors and institutions. We're speaking at the BTIG annual healthcare conference tomorrow. We're taking one-on-one meetings today. We've got 3 or 4 sort of U.S. centric banks like, Raymond James and Stifel and Oppenheimer.
These are serious players. Raymond James, great retail, great institutional. Oppenheimer, you have some serious sponsorship coming in right now.
Look, the story is resonating really well, and this is a model that isn't really being deployed at a public level today. It's being done at a private equity market level, but the multiples applied to those companies and the growth value will eventually have to get recognized later at some point, versus Skylight Health's creating that value immediately for shareholders and at a much higher return. And so, as I think it is certainly more validation that we're seeing, sort of larger institutional supported banks, wanting to take charge and create that opportunity for Skylight to create a name in the US market, which it's largely unknown today. And I think that's going to change as we continue to keep our efforts out in marketing and creating awareness with these large institutions.
Yeah. So here's, I think, so there's definitely, so having Raymond James, Stifel, Oppenheimer, these guys involved is definitely, I think this is definitely
which by the way, Oppenheimer was the lead bank for GrowGen when they did their first uplist. And so they've been with them. And actually, I think Stifel also played on their last financing. I think they did over $175 million they just raised at $35 a share. And that was before the stock, rocketed up again. So.
Okay. And I think also, so what's interesting is that, you're not known. The stock is really not that known in the US. So I think institutions right now, they're looking for that kind of ground floor opportunity, which is going to be the next. Look, they've seen what's happening with One Medical, one which has had a monster run out. What's their multiple like? Wow, they're trading at how much times?
They're at almost 20 times, I think. Oak Street's at 15 times. One Medical's at 20 times. There's another company that just IPO'd, Signify Health. They're also seeing some pretty good traction and success. Huge volumes on the back of it. So there's going to be more of these types of stories. We're already seeing conversations with companies now looking to do this on the U.S. exchange, which just means that there's going to be more investor capital. There's going to be more opportunity.
Attracted to this idea, to this type of theme. So okay, so your run rate right now with the acquisitions that are closing, what's going to be the run rate approximately?
So it'll be approximately 46 million.
Right now, 46, and what the market cap right now is approximately how many shares out?
It's about 175 million shares. I think we're at about 320 million.
Okay, so you're it's what, about 8x revenues roughly right now?
Yeah. It's it's allowing itself to get back to sort of fair market value, but this is an exciting time because now again, this is what our focus in Q1 was getting this foundation strengthened, and I'd say we're probably weeks away from being able to start introducing now that sort of second wave of M&A activity that we've been preparing for and going through.
And everybody wants. This is what the audience wants. They love the M&A studies. Okay, so the market cap still is you're still trading at half, 50% discount to peers, or maybe even more, maybe 60.
When you look at the U.S. market, there's a huge opportunity for upside on that closure. And again, to your point, because we're largely unknown today, it's also because there's largely little participation in the stock. And I think I mentioned in this last call, the feedback's been great. The demand is there. It's on the sidelines, and so we know that NASDAQ switch is going to introduce a whole lot of buying from institutions that today have to just sit and watch, and it's going to get more expensive, but that's fine. They're willing to continue to watch and follow the story, and that's again very validating to to hear feedback on.
I do want to make a comment is that, I know a lot of companies, they think that, okay, if we're going to uplist to NASDAQ, that's like the promised land. As soon as we're on NASDAQ, stock is going to explode. It's actually not, because now all of a sudden you're a small fish in a big pond. However, in certain industries, they're really, NASDAQ can make a big difference. I think in where you're, the sector kind of where you're in, that healthcare space, which institutions love, which is something where they see comps. It's something where they understand that scalable model. That will make a difference. I think in the case of Skylight, I think it's a real. I think that's a valid catalyst for the stock to being like easily double.
Yeah, and look, this NASDAQ's not an exit for the company. We're not trying to go on the NASDAQ to just get another pump of the stock and say, hey, what, we hit a new level. Great, shareholders should see that return, but the NASDAQ's an enabler for us, right? I mean, this is a real business. It needs to be on a real exchange. And based on the acquisition model that we're demonstrating against, there is more opportunity to create a larger return for shareholders as long as we continue to stay disciplined on our acquisition-based strategy. And that resonance with more investors, more institutions on an exchange that's going to continue to put more value on not just acquisition, but earnings and organic growth. We are fully confident that we're going to continue to deliver against those expectations. And for us, again, I think it's going to enable us access to a larger marketplace, more liquidity, more capital to support the overall growth. The markets are good right now, so we're certain. There's to your point, Jack, certainly not an exit.
Yeah, no, I think definitely in the case of stock, NASDAQ, this really makes it. Again, I'm sorry guys about this. This adds the value. We're doubling the value right now. So the NASDAQ is really going to make your roll-up strategy even. I mean, it's going to turbocharge everything, because all of a sudden, people, when they're getting shares that are liquid on that, that's a whole different level. You get it's gonna, once you're there with the sponsors you have now. I mean, with Raymond James, Stifel, Oppenheimer, and let's be clear why these guys involved. I mean, they want to raise a lot of money for you. They're in it basically to raise money, get commissions, bank fees. It's a win-win situation. So the fact that these guys is hugely validational. I don't know if that's an English word, but validational, I'll use it. And the NASDAQ thing is going to work. So let's go to the thing that everybody's been waiting 27 minutes for, which is about the roll-ups, the M&A wave 2. What do you have in the pipeline right now? Yeah,
so we have a lot. There's some big fish, and then there are some smaller to medium-sized opportunities. And there's a number of sort of larger tender groups that are coming to market that we're certainly going to be a part of the process on. And these combined or individually actually are probably, call it nothing less than, say, 50 million in revenue US opportunities, and they're larger than that. And again, look, the difference in the multiples you pay for these types of deals is within range, and again, fair market, but the return to shareholders in this is still significantly higher. And so I think what we're going to look to this year is we're certainly going to look to be successful with at least one of those sort of, call it, major acquisitions. And that takes time. It's a process, which, I know that, people want to also see, okay, what's in the near term. And so don't forget that while these are going on with larger deals, there's a lot of these smaller based, medium-sized volume deals that are going to continue to come. And the upside potential in the smaller ones are always greater. The multiples on the smaller ones are always better. And the competition in the smaller ones are literally, limited to none. And so there's a number of, smaller to mid-sized transactions. And, I think from our last couple of acquisitions, we're going to try and stay within that, 3 to 10 to 15 to maybe $20 million revenue range on these transactions. But there's going to be such a high volume of these transactions coming to market that, we're looking forward to Q2. Q2 is going to be the next wave. We did 6 transactions over the last 5 months. I think we can probably increase that pace a little bit more moving forward. We've got a stronger team, more infrastructure, and we're demonstrating success faster. So the goal is always to start to increase the cadence, capture the opportunity. and bring that return back to shareholders, right? So certainly in terms of pipeline, there's a lot going on, and I think as we kind of move past closing our last or sixth acquisition that we've announced, we're going to start to look to unroll and unveil that second wave.
Okay, so the second wave is gonna be. It looks like it's gonna be substantial, kind of like I would use the metaphor, like the COVID wave. The second. Maybe we shouldn't use that metaphor, but everybody knows. So the second wave. Now it's interesting. So you've done 6 acquisitions. What, 5? How 6 acquisitions?
We've closed 5. We've announced 6.
6 months.
We've announced 6. We've closed 5, and the last one should be imminent.
Okay, so the takeaway is the pace for the next quarter is going to pick up substantially.
Yeah, look, again, I'll keep saying this again. Skylight is a highly acquisitive organization, and the fact that we have friendly markets with access to capital and capital on hand means that we can be aggressive in our approach, strategic, disciplined, yet aggressive. And we've been demonstrating that. And there's no reason to think that needs to slow down in any capacity. So like I said, 2021 just began, and we've already come up with a number of acquisition targets that are going to dramatically improve our overall revenue. And what I told everyone in January is we're just starting. I mean, 2020 was just a warm up for us, and so expect some pretty large growth this year, and it's going to come through a series of a variety of size transactions. But let's not forget the organic growth that should be represented along with that as well. Okay.
And so, and again, you're doing a number of smaller deals, these a couple million to 10 million, sort of 2 to 10 million type deals, which we're going to see a lot of. But also, you're focusing on these sort of these kind of whales that are 50 million plus. These more transformative type deals where you're basically bidding you're bidding amongst other private equity groups or whatever, but you can kind of offer them a better deal. You can outbid. You can.
The upside potential on these deals is significantly larger. Look, for me, it's my challenge against myself is triple-digit growth every year, right? That's what we should try and do. So let's try and get there.
Okay, so the last time you mentioned your goal is to exit 2021, $200 million run rate. Are we still on track with that?
Why don't we try? Let's go. We got enough in the pipeline, and it's just starting.
Okay, and so Andrew is asking, how are you going to fund the massive acquisitions to get to the 200 million? Are you planning to raise capital?
I mean, look, we'll be opportunistic. So far, we've only used equity as a form of currency, and we're starting to leverage now positive cash flow that we can start to look at other options for financing. We've had conversations with a number of traditional banks around credit line facilities. The nice thing is it's not a problem for today anyways, because we do have enough in the bank to be able to move on several of the coming acquisitions. So let's bring that value back to shareholders first. And then we'll see based on sort of, where we think the right price is for these deals. And again, the currency is also becoming more attractive. Where 6 months ago it may not have been. Today it's more, and on the NASDAQ it'll be even more. And so we can certainly leverage these deals and stay disciplined in the structure we do these deals. But be able to retain more cash for more acquisition-based growth.
Okay. Can you address the share lockup ending in March?
Sure. I mean, I'd say the 25% that was sort of timed in terms of release was really the shareholders that I would say are, if they're out, they're out. If they're in, they're in. Again, there were a number in there that wouldn't have come to market anyways. But the shareholders we're talking about coming at the end of March, these are largely, our insiders and sort of tight who've really been with us from the beginning. And so we feel very confident with the holders of those shares. We know who they are. Meredith Capital is a significant holder of some of those shares as well, which again is a reporting insider in the company. So, I don't think you should expect to see, it was more of a support that was demonstrated voluntarily, which is always beneficial. But, it's certainly within very strong hands.
Okay. Jeremy's asking a great question. So who's your competition when it comes to, these $50 million plus acquisitions?
So you're talking about a higher tier. You're going into private equity at this point. I mean, the U.S. market, it's a big private equity market, and there's a lot of cash available for these organizations. And so typically they have thresholds, meaning that they can't look at deals, less than, call it 10 million in EBITDA, right? And optimally, a lot of the large private equity likes to only do deals that are no less than 25 million in EBITDA. And so you've got a number of these smaller private equity groups who build towards the 25 to then sell into a larger private equity group. So typically, depending on the range that we see, it's private equity that you'll go against. They will pay fair market value. For them to pay a premium is more difficult. For them to get a value more than private equity value is difficult. And that's where Skylight is able to leverage a public profile. I mean, we can create upside through shares. We can create upside through growth valued at a revenue multiple as opposed to EBITDA multiples. So there's a number of reasons why, if you're a sponsor looking to exit your business that today might be doing 50 million in revenue or 5 million in EBITDA, you're probably in a better position to see more value selling it to Skylight that can match private equity and more.
Okay, we had a question, and okay, I lost the question, but I was asking, I think, we had a question about, are you going to be funding these acquisitions with equity, debt? What are you obviously, you're focused on shareholder value, right? So I guess what's going to be the...
Yeah, I mean, look, so far we've been using primarily equity for these transactions in terms of cash raised through equity offerings. But whether we want to consider using some sort of combination of shares that are timed to milestones and escrowed over time and against deliverables that need to come in, there's a benefit in being able to tie in the owners in a way that otherwise, if they sell to a hospital system, again, the hospital can generate a 10x return on the business and the providers see nothing from it. And so, still feeling a sense of ownership while not having to deal with the administrative burdens. Well, that's really one of the biggest value adds Skylight Health brings to these practices. So, I think that there's a value in thinking about it that way. But again, we look at it based on a shareholder value in terms of, okay, is this the right type of shareholder who we'd want to be long-term? Are they the right type of investor who would hold Skylight Health long-term? And then, certainly validate that against whether or not the cost of dilution is worth it.
Brad, I'm actually shocked we have this question here coming in from Braden, saying people tend to focus on the short term, but where do you hope the company goes in the next 5 to 10 years? Oh my God, he's thinking beyond 5 months. Brad, I guess I'll ask I was going to say 2/3, but what is? I mean, do you have a five-year goal? I mean, are you?
Yep.
What's the goal?
Well, Brad, he's now thinking. My type of thinking. And so certainly, look, we're significant shareholders in the company, and we want to see short-term growth as fast as possible, as much as we need to see long-term growth as fast as possible. So, whether it takes us 5 years to get there or sooner, I can't tell you. We certainly want to get there at the right time. But where does this company go long-term? It continues to consolidate, continues to drive tremendous market share. It gets to a point where strength and volume and density allows us to be strong negotiators when it comes to payers and contracts. It allows for us to play in the value-based market in the US, which for, into all intents and purposes is a much more sort of long-term focused revenue model stream, a payment model stream that the US is moving to. So all in all, it continues to evolve us to be a very strong creating strong profitability growth along the way.
Okay. Yeah, the internet just broke up, but okay. So, Brad, to kind of wrap up here, what's the, I guess, our favorite, 2 questions I was going to ask is, the usual questions, which people want to know is what can we expect, the next, let's call it 4 to 8 weeks? People want to see what kind of news flow they can look forward to.
So, let's stay tuned to further news on the NASDAQ and potential uplist there. Let's stay tuned to the closing of our 6th acquisition that needs to be announced. And let's stay tuned for the next wave of M&A because it might come sooner than that. And so we're certainly working diligently and wanting to make sure that we check off boxes along the way. And look, we've been also putting out news on organic growth as well. So it's important not just to see the M&A, but the organic, but certainly, we know how much people are waiting for that second wave, and we want to, be able to hold a little bit of suspense, but not too much.
Okay, so sounds like some things are in the pipeline in the near term. I'm not going to put words in your mouth, but that's what it sounds like to me. There's going to be some news. Okay, Brad, let's wrap up. Last question, the favorite question we have right now. February 17th. In your opinion, based on everything you have right now, what would you say is, I mean, look, if you're talking to institutions, I mean, if a guy asks, hey, top 3 reasons why investors should invest in your stock, what, in your opinion, what are they?
So I think I'll go back to it. There's never been a better time. Skylight Health is demonstrating execution and growth. We are demonstrating strong acquisition pipelines at disciplined multiples in a disciplined space of healthcare, and executing organically now against that growth. And as we continue to build the pipeline. Number 2, you're investing in people, and you're investing in a management team that started with founders who've had significant experience doing just this and adding to a larger market, but now being validated with the addition of, call it, multi-billion-dollar experience at the Skylight level. And that management team is only stronger today than it's ever been before. And then lastly, you have an opportunity to participate in a story at the ground level that is generating, real revenues, real earnings, and has the ability to actually leverage cash flow for growth, but is also seeing the opportunity to leverage a public market for growth and being able to demonstrate that against faster opportunities for building top line revenues and profitability, and which is already discounted compared to its peers.
Okay, Fred, on that note, I want to thank you. I will look forward to having you back on ASAP with some significant news. I know you're going to be on soon. So thank you, and we'll see you soon.
Oh, thanks, Jack. Appreciate it.
Okay, fantastic stuff. Another company that is approaching 10-bagger status. Let's see if they're going to be, again, we're looking for 100-baggers now. We've got to raise the bar. I was actually speaking to one of our CEOs, and I said, hey, it used to be, maybe 10, 15 years ago, like a 10-bagger was a big deal. Not every stock went up 10x. Now there's so many stocks, NASDAQ, that are up, 10, 20, all these tech stocks that, the bar has been raised. It's sort of like the 4-minute mile. The first time somebody ran the 4-minute mile, I think nobody's ever ran a 4-minute mile in, thousands of years. A guy named Roger Bannister broke the 4-minute mile in, I think, the 1950s or early 60s. Right after that, like 100 people ran a mile in less than 4 minutes. And I think now it's like a common thing in high schools. So right now, I think we're going to see, 100-bagger stocks, which is what we need. Okay, so speaking of 100-baggers, let's get ready to meet our next potential 100-bagger. Okay, potential 100-bagger. Conrad, can you hear me?
Yes, sir. How's it going?
Fantastic. Hey, were you able to hear what I was talking about, the 4-minute mile story?
Yeah, I got a question for you. Don't worry.
Excellent. Okay, so let me get things set up here on our panel. Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream, February 17th, 2021. We are back with ESE Entertainment, ESE on the TSX, ENTEF over the counter. Conrad, welcome back.
Always love being on, Jack. Thanks for having me on.
Conrad, I know our audience loves having you on because every time you're on, the stock seems to go higher.
Yeah. It's called execution, my friend. And, I think there's no better way to start today by just asking you a little question.
Oh, I'm not used to questions.
So,
go ahead.
Simply put, you talk 10-baggers, 20-baggers, 100-baggers. Where do you see us? I want to hear it from you.
You're putting me on the spot. I have to be like, independent. I have to do it offline. I look at the charts, I look at the whole picture. So I don't want to make any official comments. I see the stock higher, as I'll say, listen, I'll put it this way. When we bring a company onto our platform, I'm looking for a minimum of 10x plus, right? So I think you start off at 40 cents, right? So I'm looking minimum of $4 or $5 is kind of the baseline, based on where we were in December, right, when we started. So we're 3 months in, 2 months in. So the story is improved. So maybe the bar is being set higher. So
and that's exactly what I wanted to do. I was listening in towards the end of the last interview. You're talking 100 baggers. Let's set the bar as high as possible. Let's shoot for the 100 bagger. We're not interested in the 10 bagger. I agree with you. I mean, that's something of the past. Let's go for 100 bagger. That's where our mindset's at. The $1 billion mindset has not changed. I think we've proven that with this last acquisition we did. This is happening right now. And the pipeline that I spoke about the last time I was on, 100 million plus in revenue in the pipeline, that's growing. And there's deals out there. We're actively working on several of them. But I just wanted everyone to be crystal clear that nothing's changed. If anything, we're going to keep setting that bar higher and higher and higher.
Okay, that's a good. I think we're off to a good start today. So the stock was 40 cents, I think, when we started, right? I think right now, the other day it hit was it 250? I can't even track it. It keeps going. Was it 282? I think was the recent high. It looks like it's kind of settling into this $2 kind of range, which is a good kind of base level. So yeah, I guess we've got to see what are going to be the catalysts that can move this thing up, right? So I think people are looking at acquisitions, they're looking at the internal growth, the whole story. But let's kind of start off with, I think, what everybody cares about is this new deal. You're closing this acquisition. Tell us about was it World WPA? What is it?
WPG, yeah, World Performance Group. So we spoke about it on our last interview a little bit, but it's really important to understand this is a significant addition to our company, not only from a standpoint that we brought on 14 million plus in revenue onto the books, which in this space is very, very significant, but more importantly, the infrastructure it provides for us as a company. We bring on an additional 100 plus employees in several different countries, new geographies, and it really helps us focus on the fan engagement. So providing infrastructure for leagues, tournaments, teams, not only in esports, but traditional sports as well. So it really helps us expand our offering in many new geographies, many new countries, and provides us with that infrastructure and bandwidth to scale to these big numbers that I'm talking about before.
Okay, and who are some of their customers, so people can understand exactly what does this World WPG do?
Yeah, unfortunately, we can't get into too many details, but what I can say, and viewers are smart enough to do their own due diligence, but this puts us in a position to be working with one of the largest motorsport companies in the world, which ties into our sim racing side of the business very well, and it also puts us in partnership with the largest esports company in the world. And for all the esports fans, I mean, that's a very easy one to figure out. But it just puts us in that grouping with these multi-billion-dollar conglomerates that are basically going to help us continue to scale our business.
Okay. And so basically, you're getting this infrastructure deal, so it's going to add 14 million revenues to the run rate.
Yeah.
How does it set you up for future acquisitions? I mean, like what kind of synergies would that have with some of the other deals you're looking at with your existing business? Like, what kind of value can be unleashed here with this?
So that's the really exciting part, and that's the upside of this deal. That baseline foundation and infrastructure now that we have with WPG, when we do our next acquisitions, there's so much synergy because we're going to continue to provide that back-end infrastructure support for those groups then to grow, through software, social channel management, Discord, Reddit, all those things. This group does a lot of that back-end work, that infrastructure work that these groups need to really scale. So we could take a potential M&A target, drive margins, drive revenue for them by providing this infrastructure. It's more important than people are giving credit to. Okay.
Interesting. We got a question. Okay, so we got the guy saying he's seen firsthand everything you've done. Tell us a little bit. Actually, it's funny. We had a guy on the other day who said he did judo with your brother or something.
Yeah, that's possible. Yeah.
We got people who know. There's a lot of people who know you from Canada, from Vancouver. So
that's a good thing. I mean, if there's positive feedback from people who know me in the past, understand my integrity, what I've done in the past, they know that when I say I'm just getting started, it's a huge understatement.
okay, so the goal is here. What's the goal for 2021? You're going to exit. I mean, you 100 million plus revenues. Is that realistic right now with this new deal?
So that's the run rate goal for 2021. 100 million plus. We want to continue on that very aggressive accreted M&A pipeline track and continue to close those deals, and not in a month or 2 months. Now we want to do it now. We got 3 offers out there right now. We want to close one of them immediately and get on to the next one. We closed WPG. We already had 3 or 4 in the pipeline. That's the mentality. We're not waiting. The time is now. Capital's available. The market's very healthy, as you guys know. It's go time, and we have the deals in place to go after it. I mean, you look.
Timing is everything. Timing is everything. This is really
timing. Yeah, timing's everything, and we study groups like Constellation Software. Look up that stock. Groups that have done 500 acquisitions that are a $30+ billion company. We study that. We want to implement the same type of mentality where we're just going just one after the other with accretive acquisitions, driving revenues, driving profit margins. That's how we're going to get to $1 billion as fast as possible.
Okay, $1 billion cap or $1 billion revenues? $1 billion market cap for starters, let's say. At least market cap. Right?
You got to start somewhere.
Yes, exactly. Because the esports business is not quite enough stuff for you to pick up. It's not is it the $1 billion is still a big chunk of a revenues for that. It's definitely 100 million. You can easily pick up. I'm looking at EGLX in a way because that kind of pay for the story in a way, because I don't where they were, I don't know, a year ago, whatever. Not much different from where you are now. Maybe they have maybe a slight head start, but not much different.
No, I think that's a great comparable. And the reality is they did hit $1 billion market cap recently at one point. But the reality is, like you said, we were at a very similar spot, and they've been able to accomplish that within, call it 6 to 8 months. I believe that we have a tighter structure, a hungrier group that has a better M&A pipeline. I think we could do it faster and more effectively. They've raised a boatload of money. We haven't, and we're competing on that level now for similar acquisitions. And I'm excited to get there. I mean, they proved that it's possible. And all it did is just make me want to fly right by that line, right past the 1 billion mark.
It's good to know that you're motivated. So they just for like comparison, I think they start off it was like a 50-cent stock, EGLX back. And what is it, $8 now? I think it was some crazy number.
Yeah, I believe around 50 to $1, and they peaked at about $9.50 or something in that range. I don't know exactly, but it just shows you the upside, right? And like I said, we haven't even started. We've just been listed for 6 months. So hold on tight because we're just getting going here.
Yeah, I mean, I listen. I look at it this way. I think if EGLX can do it, I mean, I think it makes it. It's almost like that 4-minute mile story. It kind of makes things much easier for the next guy to come in and even beat that.
Absolutely.
So yeah, it's very interesting. And you mentioned just now you have 3 deals that you're looking at. What stage are they at? Like, when can we expect? I think probably somebody's gonna ask, when are we gonna see the next deal announced?
Yeah, so we got 3 groups. We're in the late stages. What I mean by late stages is, just going back and forth with legal and discussing terms, etc. To give you a timeline, it's very difficult to give you a timeline. Me personally, I would love to get it done fast. And when I mean fast, I mean within the next few weeks. So definitely keep your eyes open, follow the news. We should be getting something in the pipeline pretty quick here, but we also don't want to rush at the same time. But I'm also not waiting. I mean, offers are going out, and you're either jumping on this rocket ship or you're not.
Yeah, and it's definitely, I think it definitely helps kind of, energize things, and create more of a sense of urgency with, some of like your acquisition targets, because look, they see the stock is moving and people want to, they want to get, look, once, at 50 cents, it's one thing, $1 is one thing. Once you get into that $2 level, $5 becomes the next number. So it's kind of like people see that. And once $5, then all of a sudden, $5 becomes $25, because from 5 to 25 is, it becomes more real. People, so their imagination opens up. So essentially, I think you're in a pretty good spot. What else is happening in terms of just as an update in terms of the existing business? And we'll open up for questions. If we have any questions, anybody, please ask your questions. What's happening with the Kick? What's going on with the other parts of the business right now?
Yeah, this is the most exciting part, and you just touched on it. Even from a corporate standpoint, your core team, all your employees are fired up as well. I mean, there's a new sense of urgency. There's a new energy in the room, and I could see it because the deal flow, has doubled, if not tripled, since last year. There's more deals. There's more visibility on deals. And it's really exciting to see. And now with WPG, we're entering into tenders for contracts that are not 6 figures, but now 7 figures. So you could see that deal flow is just expanding and expanding. And it's not taking months to happen. It's happening right now. So that gets me really fired up from that standpoint. So all of our verticals, all of our business lines are really scaling fast.
Okay, and it's also, it does help. Look, when the stock is performing, look, the companies that you're talking to, customers, etc. These are big, large enterprises, sponsors, etc. It gives them more of a sense of confidence when they see the stock is like moving, and they say, they want to be involved. They see, oh, it's a validation. It's kind of a it's a virtuous cycle. Let's see. I want to see, do we have any questions? Oh, okay, valid question. Nico asking, I guess the question is, are you going to be raising more capital in the near future? I guess he's asking about dilution. Is there going to be dilution?
Yeah, I mean, if you look at the structure of our last deal, we definitely had the shareholders in mind. There's only 138,000 in cash, and 7.25 million in shares. So, in my opinion, that's a home run type of acquisition, and with everybody in line with the vision. As it pertains to next acquisitions, if it makes sense from a shareholder standpoint, from a corporate standpoint, to raise more capital to do larger acquisitions, we're definitely going to entertain that. But at the moment, we don't need the capital. We have a healthy till, and we don't need to go down that road right now.
Okay. Question about betting. Are you looking to? If people have asked this before, what are any plans for entry into betting in Canada or elsewhere?
So, it's something that's always on the back burner. I have a history in that space. I believe in that space, and there's huge growth there. But, we haven't made any concrete decisions to go down that road. But we're always going to have a finger on the pulse. You better believe that.
Look at this. We're going to comment. J.H. Kim, one of our fans, I think this guy was in at 40 cents. I'm back in. Should not have sold out. And he says he's back in. What is it? He says,
hey, I agree with him. Hold on. Just be patient, my friend. Give me a little bit of time to work.
Okay. So things are shaping up. Acquisitions. You talk about everything else. I guess what else can we look forward to in the next? Let's call it again. I always ask the same things because people want to know. Wait, what are you doing tomorrow at 3:00? Everybody has a short term. So with that in mind, what's in the pipeline that people can track the next? Let's call it. I think you'll be back on within the next 2 weeks, but let's just say, what's the next 4 weeks that's in the pipeline? What kind of news flow?
Well, news flow is going to be consistent. We're going to continue to bring on new sponsors, new deals. That's never going to stop. Our pipeline from a deal flow standpoint, we have enough news for the rest of the year. But where my core focus is right now, and where we're going to really pound 24/7, is on the M&A trail. It's such a deep M&A group of companies that we're looking at. That's where I'm just laser focused on that. My team's doing a great job with day-to-day operations. I'm just going to dive into the M&A side. And like you said, you're going to see it soon because we're putting in the work. We're working 7 days a week on this thing. Like these deals are coming in. We're going to close them just like we did the last one. And I'm going to be back on here explaining the next deal. And it's going to be accretive. It's going to be with 100% the shareholders in mind, and in line with that $1 billion market cap goal.
Okay, so I actually don't know why I didn't bring it up. I apologize, but really it's just because $14 million actually it takes you to a whole new level. I mean, it doesn't sound like a lot of money in big. We're talking 100 million, billion. All of a sudden, but really 14 million for where you're at. It's a transformative deal. So it's like really the company's first big deal. Really, this is kind of places you on the map at this point. It's kind of it is.
Well, I mean, this is where I encourage viewers to go do their own due diligence and research. Have a quick look at Score. A $5 stock, $2.1 billion market cap. Go have a look at GMBL on the NASDAQ, etc. Do your own research. Look at their revenues compared to ours, and you'll be pleasantly surprised. For this space, 14 plus million, that's not including our organic revenue, is a lot in esports. And to be break-even profitable, that's even another step above. So I really encourage the viewers to do their own research, because I did mine. And the next acquisition is going to be the same thing, and we're going to keep adding accretive revenue onto this model, and we're just going to continue to separate from the other groups. They will not be able to keep up.
So how many number of shares fully diluted that you're going to have outstanding after this deal closes approximately?
So roughly, we anticipate about 50 million in that range to be outstanding, which puts us in a tremendous spot once again. Do your research, look at some of the other groups, how much they have outstanding. And with 14 million in revenue, I think you'll be hard pressed to find a group that in a similar position to us. I mean, it's all upside. There's no downward pressure.
So you got about 100. You're going to have roughly US, about 100 million market cap. You get, I don't know. So you're going to be trading at like, I don't know, eight times revenues right now. So it's still a very cheap number compared to peers in the space that are like 3 times the number, that number or more. Whatever the number is. It's some
of the multiples are very interesting to say the least.
Okay. Okay. So let's. I'm gonna wrap up. A last question here. A favorite question. What the question is. Conrad, your opinion based on what we have now, like with the new deal. Top 3 reasons why investors should consider ESE right now.
I'm gonna keep it the same every single time. Ground floor opportunity. You have to believe that we have not even started. Let us get into this M&A pipeline. This is a ground floor opportunity. Number 2, multi-billion-dollar and growing industry. This is a generational opportunity. I don't believe we've even scratched the surface of how big this esports and gaming segment is on a global scale. And number 3, the one that puts a smile on my face, we got 100 million plus in revenue in the M&A pipeline. Do the math, guys. We're heading to $1 billion.
I mean, on that note, well, actually, I was going to say thank you, but I want to add a comment. Just add a comment is that we talk about esports. Like we've talked about, esports is going to be the dominant, one of the big dominant market themes. Everything is going to digital, esports, gaming, everything else. And if you think about it, what's been the hottest stock in the last, let's call it 100 years, GameStop. I mean, so, which is essentially in the video game space. So that kind of gives an indication of that investors are really. I mean, we've seen video game stocks have been hot, but this I think is going to catalyze the space further. And I mean, if people are buying GameStop for I don't know what the stock went, whatever the number was, like 4, crazy number. This is definitely.
It gives you a glimpse into the appetite for the space. And like I said, we're just getting started, and the awareness is just getting started. But it gives you a real close sense of that appetite. It's unbelievable.
Connor, I think you nailed it. That's exactly what I was aiming for. Is it gives you a sense of kind of the appetite, investor demand for a hot story in this sector, anything touching it. So on that note, Conrad, thank you again. I'll see you on the next for the next update.
Fantastic, and I love the tagline: 100 baggers only.
Excellent. Now you have to fulfill that. You
got to say it first. Let's go.
Thank you, Conrad.
Have a great day, guys.
Okay, 100 baggers only. So let's get ready. That was amazing. I mean, the stock has come a far way. 40 cents, 280. It looks like it's just getting started here. Let's get ready for our next presenter. It's a debut presentation. And I'm going to bring up stand by. I'm going to bring up this onto the screen right here. Where is the banner for Delic? Okay, so we're gonna have to make you wait just 1 second. Stand by. I have to create this banner. So it looks like we had a technical issue here. It'll be well worth it. Okay, and one more. Okay, now we're ready for 100 baggers. Matt, can you hear me?
How you doing? I can hear you.
Fantastic. We got a lot of people waiting for you here today.
Well, thank you for having me on, Jack.
Absolutely. So let me just do a quick intro. Welcome everybody to Wall Street Reporter's Investors Discovery Day live stream, where we bring you those stocks which have a 10x to 100x upside potential. As you've seen in some of our previous presenters on the live stream, we've had a number of stocks up already. The previous guests are 5x plus. We had a 20x already that started back in October. We're going to find out if Delic, DELC, is going to be that next. I don't even want to say 10 bagger because we're raising the bar, Matt. I don't know if you were listening. We're looking for those 100 baggers.
Wow. I like to exceed expectations, so I think that's realistic.
I like the way you think. So on that note, I wanna kind of, again, this is your first time on a program. So what I'd like to do is, I'm going to do things a little bit backwards. Usually I ask the CEOs to tell us, explain the story a little bit. But what I think is important in your case is, I always emphasize, because again, the industry you're in, the psychedelic space, right? It's a brand new industry. So it's kind of, it's kind of the dawn of a new era, a new industry. Everything is wide open. At this, I think it's much more important to really focus on the CEO, the team behind it. Because look, we've seen a great CEO can take a business and really transform it into something completely different and take it to a whole new. We saw it like, if you look at we had a guy turned a funeral home and apartment to Time Warner. That was Steve Ross. We had a guy turned a schmata business into Berkshire Hathaway. That was Warren Buffett, right? He turned what was a busted down textile mill into a monster company. So you have a very interesting background. So that's why I'd like you kind of to tell the audience about your background and some of the key players in your team, and then we'll get into the whole story.
Sounds great. So my background is 20 years in another very nascent industry. So helping build the legal cannabis business. Spent about a little less than 20 years. Owned and operated a company called High Times. Really, helped drive that from a kind of a magazine business into a very large scale events and digital media business. And then I sold it to a private equity firm a couple of years ago. And really, my background has been in helping build a nascent industry out of nothing. So I really understand what this takes and what the potential that psychedelics bring, right? So we started this 2 years ago as the world's first psychedelic wellness corporation. And my wife and I, we really saw there was a tipping point in the same way that cannabis had a tipping point many years before the investment community really latched on. And we saw that same tipping point coming to psychedelics. So we created this company. And in terms of team, we have a really incredible group of people that we brought around this. We have Craig Fox, former CEO of High Times, manager of the Grateful Dead. We have Paul, who is just fantastic, founding CEO of Kronos Group, a bunch of other major cannabis companies. We have Zach Garcia, who was the founding CMO of a company called Bulletproof, took that from zero to a couple $100 million in revenue.
So it was Bulletproof Coffee.
Bulletproof Nutrition. Yeah, my wife was one of the first employees at Bulletproof as well. So she's been on another nascent industry build, taking that paleo kind of health and wellness world from kind of outcast to center stage. And I think that
now the plant-based, those are the hot style, the plant-based, right? So so you're a bit of pioneer in a couple of sectors. Cannabis first,
exactly,
and you have a team that's basically touched on all these areas, and of course,
exactly. We have Greg Crow, who runs a $200 million growth capital fund for cannabis, invested in most of the big deals in California that are soon to be public because they've been so profitable and large. And I think what we really bring is an experienced team. We bring folks who have lived this story before and understand how to take something from 0 to 100 bagger. I think what we see here is it's such a nascent opportunity and there's so much that can be done, but we're very focused, right? We're not trying to be all things to all people. We want to focus on creating an ecosystem. So we started this company with a media and events because we knew there was no such thing as a legal psychedelic business 2 years ago. So we created an ecosystem where we bring people together. And then what we've done is we took the company public about 3 months ago and are using that public capital to buy up revenue positive companies and then scale them. And that's really, where we see there being a huge opportunity. So we announced our first acquisition, a chain of ketamine clinics, and really see that, making psychedelic wellness accessible, right? We don't want to be so high price that people don't feel comfortable and so out of reach for the main line. We think there's a giant crisis in mental health, right? And I don't think I have to tell you that, but I should tell you that the pandemic, the reason that I'm sitting at home with a my background instead of in an office like everyone else, and we're all sitting at home, is because we've been stuck without human connection for a year, right? So there's just this huge crisis, anxiety, depression, PTSD, and psychedelics are, for lack of the better word, an answer, right? There is incredibly deep, strong science that they are one of the few mechanisms for helping people get through their mental health issues. And so we believe, we know that people need psychedelic wellness. And so we're building our ecosystem, and we see our media and events platform as a way to kind of drive awareness. And now this is something that I really, having lived it in cannabis, as things go from black to white, there's no leadership, and there's no real knowledge of what the right or best thing to do is. So if you have a media platform, like when I ran High Times, that created these billion-dollar brands that are out there. So what we've set out to do with Delic is build the platform and then buy the companies that are doing great things, scale them, and then give them that reputational sheen and large-scale customer base to be leaders in the space.
Okay, so Matt, the reason I asked about your background is because, again, we're in this kind of, as you call it, it's a nascent industry, right? So, what Delic is right now, it's not what it's going to look like in 18 months. It's going to be a completely transformed company. I assume it's going to be completely different. You're going to have acquisitions, etc. So exactly. I think what is important for the audiences to understand is, what is your vision? What is your vision for the company? Like, what could this become? It's the potential. What kind of deals are you looking at? You mentioned you're focused on these accretive acquisitions. Companies with revenues. I guess are you building a psychedelic? I don't want to use the word conglomerate, but I guess psychedelic eco. What are you building exactly here?
Yeah, we see this as all of the parts funnel into each other in an ecosystem, right? When you build an ecosystem, we see this as tremendous deal flow, more and more, just from my personal network in the alternative drug space over the last 20 years. I know most of the people who have built the cannabis industry, if not all of them, in some manner or fashion, because they've come through one of my different events or magazines, or I ran the High Times 100. I created that, which was the 100 most influential people in cannabis for many years, right? There's all of these different places and those same people who blazed this trail for cannabis are now the people who are pushing it forward for psychedelics. And so we have a lot of incredible opportunities, and we feel like we've created a really great structure. We came out kind of with an incredible team, and have really been looking for deals that, as you said, are accretive and really cash flow positive, and we can pour capital on to grow, and then use our ecosystem to funnel both reputational excellence and people to buy, to actually spend money. And I think it's a lot of the deals you'll see in psychedelics are telling you, give me 5 years and I'll make you billions. And I'm saying, give me 2 years and we'll get there, and we'll have something that is really concrete and doesn't have the risk of total catastrophic failure that the long-term drug development does. And that's what we're doing. And it's only been 3 months, and you've already seen the stock is up many multiples. We have an incredibly tight structure. We're doing this in the right way with the right group of people to make sure people make a lot of money, but also build the foundational aspect of psychedelic wellness. And that's what we want to do.
In a way, you're almost like a SPAC of psychedelics, in a way. I mean, in other words, it's sort of like you have like kind of an infrastructure, you have some capital, you got the team, most important, which is can basically choose the right deals and create value. So it's kind of like, I think it's almost like if somebody wants to invest in the psychedelic space, this is kind of like, hey, this is a good play. Matt, I want to ask you, so you were kind of like a pioneer of the cannabis space, or I guess the legalization, the trend towards the boom. What do you see psychedelics, mushrooms, and what's the commonality here? And is it going to be the same type of level, or different, smaller? What's going to be the?
It's a great question. I think there's only one cannabis, right? There's many different strains, and there's indica and sativa, but really there's cannabis. When you're talking about psychedelics, there's many different psychedelics, and there's many different delivery systems, and there's many different mechanisms. So you have mushrooms, which I think you're asking about, and you're right to ask about, because we see that being a huge opportunity. We're planning on working to create some incredible novel kind of IP around it, and be able to monetize that in the Oregon market as that comes online. We have some very interesting ideas there. I think that will be its own multi-billion-dollar market. I think they call it quasi-medical, almost recreational, kind of the line that cannabis walked 10 years ago. I think that's coming for mushrooms, because there is zero toxicity. There is almost an anti-addiction property, because if you take more, you get less effect. You have a lot of different benefits. It's markedly safer than alcohol. It has not only the macro dose possibility, but it's also got this massive microdose possibility. There's many new and interesting mechanisms for its delivery and consumption that we're working on. So I think that on its own is a multi-billion-dollar worldwide market, and you'll see, once Oregon gets up and running, other states that have similar bents towards liberalizing the drug laws will pass similar laws. They'll be a little different. The structure will be a little different. It'll be state specific. But I mean, you look at New Jersey just decriminalized mushrooms 2 weeks ago. Who would have thought that 2 years ago? When we created this company, people were like, you must be taking drugs. And now they're like, wow, you guys were really on top of something. I'm like, this is what we do. We see around those corners because we're in the middle of it, right? It just, when you understand how much work has been gone into liberalizing the cannabis laws, and how much has been done to kind of shake off the stigma of just say no and the war on drugs, you kind of understand that there's been a giant trail chopped through this wilderness by cannabis. So it's a much easier path to break through with something like mushrooms. So back to your original question.
The road has been paved. The road has been paved for mushrooms.
It might not be paved, but it's certainly been hacked clear, and you can walk it much quicker, right?
It's not going to take us 10 years like with
it's not going to take 10 or 15 years. It's going to be a snowball effect, right? And I think that's A. And then I think
already.
The broader question about psychedelics is that there are many novel compounds, the ones that you think of from rave culture, from hippie culture, from Timothy Leary on down. And then there's literally dozens of novel compounds that are taken from that are in development in phase 1 or 2 clinical trials. We think there is a huge opportunity to be on the FDA compliance side. You're going to need a clinical office that specializes in psychedelic healing. We're going to build a lot of those that give people the opportunity to pull from whichever toolkit in the psychedelic arsenal. So if you want to do, let's say, psilocybin, well, that looks like we've got about 1.5 years. If you want to do MDMA, that looks like 1 year. All of these other compounds behind it, that's 2-3 years. So those things will come along, and that's its own multi-billion-dollar market, right? And then there's the crossover. There's the ayahuascas of the world, which have hundreds and hundreds of spaces around the world, mostly under religious exemption here, under religious exemption in South America. There is all of this other plant medicine is kind of the catch-all, but that is its own potentially multi-billion-dollar market. So what I'm saying is there's multiple different multi-billion-dollar addressable markets here, and we think we have the capacity to help build, I would say, 2 of those in a realistic, meaningful way. And you look at the kind of valuations that people are giving to companies that are basically pre-revenue, and we're going to have millions of dollars in revenue from the deals we close. So that's what we see.
Okay, Matt, what right now, what kind of what's the business, the operations, like what do you have like at the moment at Delic?
So we have Reality Sandwich, which is a kind of news and information site around psychedelics. Gets a few 100,000 people a month who are looking for what to do, which substances, why, how, kind of a discovery, bring people in, and you get them into the ecosystem. We have a series of events called Meet Delic.
Is that the high times of psychedelics, basically? Are you building the high?
I would, people have said that to me. I certainly feel like we've built something that is really meaningful and has a lot of traffic, and people are really interested in, as this nascent industry grows, where do they go to find it? We have a very strong domain authority and tens of thousands of articles about it, and it ranks really well, and people find out about it through us. So that's kind of the A piece. We have Meet Delic, which is a kind of a psychedelic wellness summit that we've been doing online events, drawing tens of thousands of people. So that's been going very well. And then, we just bought, or in the process of acquiring, we've announced the acquisition, a company called KIC, Ketamine Infusion Centers. The team behind that has built dozens of clinics. They're really super experienced at rolling out and scaling the clinic business. So they're coming inside, and the idea is, they have, it's a small chain, but they have the potential to open dozens more in the next 2 years. So that's really part of our strategy, and we have other deals in the pipeline. We're looking at a regional champion strategy where we're bringing people in who are really strong in their region and can expand outwards in a way that's very capital efficient, it's very people efficient, and allows us to drive traffic in a meaningful way with kind of local investment in that driving traffic. And so we really see this as being a super strong opportunity to get in on the ground floor of that psychedelic wellness business. And then we have some other acquisitions that, obviously I want to say it's going to close tomorrow, but could be in 3 weeks. You never know. Things like that take time. But we have some really great businesses that we think we're going to be able to announce in the next, say, 3 to 4 weeks that will kind of show you where else we're going and how we're doing it.
Okay, so there's a couple things that are very compelling. So, you're at this, again, things that we like here are, mass market opportunities, is right, at that inflection point in multiple catalysts. So we're at that inflection point for psychedelics, and it seems like you're kind of at the inflection point right now where you kind of have right now the kind of, I guess, the basis. You're getting the media business. I guess that brings in deal flow for other for deals. You have the team, you have these things, but really, I think this is like a very small piece of what this thing is going to look like 12 months from now. That's just my take on it. Just like it's
totally correct.
So I'm looking at this as almost like it's almost like like I call it, it's a SPAC of psychedelics, but really not. It's more of an operational company, but it's going to evolve into something which could be incredible, interesting opportunity. So back to the ketamine clinics, like what kind of revenues are they generating right now, and what's going to be the model for building that out?
Yeah, sure. So right now, obviously, COVID hurt everyone, just in terms of bringing people inside in kind of a crowded space. So their numbers were about a little sub $1 million for last year, but these clinics can do about $1 million each, somewhere in a 27 to 33% margin. So very profitable and very, the numbers are, you don't have to have a staggering number of people to make it work really well. And the team, as I said, they've opened 27 clinics in the last 5 years. And so we're bringing them in-house, and the plan is to open somewhere between 14 and 18 clinics in the next 24 months with this team in the greater Southwest region. And what we see is really interesting is they've really done a great job of building out an insurance program so that people who might not find psychedelic wellness accessible can through our clinic operation. So people who would otherwise be frozen out by multi-$1,000 cash payments are able to come in and get better. And I think it's going to be a huge deal over the next 12 to 24 months as people come out of lockdown and have these kind of, post-traumatic stress disorder. There's a lot of that coming out of feeling, the pandemic made people feel like they were going to die. And that's very real and visceral. And it's very hard to process that stuff through. And that's what I think psychedelics really do incredibly well. That's why we founded this company. My wife and I, we found this really incredible healing through psychedelic wellness. My wife had some severe anxiety disorders, and ketamine has been incredibly beneficial to helping her get through that. And that's why I'm sitting here today. It is not only a business, but it's also a very strong personal mission to get this out to more people.
So the ketamine, the clinics. So what are you going to be? So there's a couple of other players out there, in the space, ketamine clinics. What are you going to do? So what are you doing differently? What's going to be like your unique advantage?
Yeah, I think it's team. It's about, the model itself is very low CapEx. So building out is not incredibly expensive. And we're keeping the price point and the barrier to entry very low by keeping it coverable by, call it 67% of the patients going through right now are covered by insurance. So we have this, you look at the other business models that are out there, and it's cash pay. And we looked at a ton of deals, and that was really.
So what's the difference? The cash pay, how much are they? So cash pay versus yours, like what's going to be the outlay for the patient?
The customer in ours who is covered is putting out no capital. They're getting covered by insurance, so that their insurance is getting billed. They're getting, treated. They're getting, they're dealing with their anxiety, their treatment-resistant depression, their whatever the clinical definition that they're in there to treat, and they're getting it without having to, pay a mortgage payment, basically. Because that's, if you look at I
heard the numbers, like a couple of grand.
Yeah, exactly. So it's very hard for a lot of people to come up with that much money. There's the people who, people who have nice suits and ties on might be able to afford it, a nice pocket square, but the majority of America can't. And there's a mental health crisis sweeping this country, and you see it. It was in the Wall Street Journal yesterday.
Yeah, I mean, I wouldn't want to pay $2,000 for any treatment. Why would I pay $2,000?
I'm saying, so we're giving people a very accessible option, and bringing them through and giving them healing. And you look at the wellness industry. You want to talk about $1 trillion potential, right? You instead of billions, you're talking with T's, because wellness is, if you ask anyone what they're willing to do for wellness, it's staggering, and so
it has no price, really.
Because otherwise, what are you doing it for? What are you making the money for? What are you making the time for? So it's just like,
Matt, here's a question. How are you able to have this covered by insurance? Like, what are the other guys doing that's different? Like, because if they're charging a couple of grand, you're doing it for like, how is the model?
It's about the team and the data collection and kind of how they've worked through, relationships with local insurance companies where the insurance companies cover what they do. So it's, I don't want to disclose trade secrets on open air, but they've done a very good job. We looked at 50 or 60 clinic businesses, and the reason this was our first deal is we really believed in the team and the model, and seeing that they've managed to do this for the last couple of years in a really successful way. And I think we also got a very good deal because they had to go through the lockdown in California. It shut down a lot of people's businesses, and it's been hard for small business owners. So we have a good opportunity to help kind of supercharge their growth out of the last 6 months of whatever. And I think it's really spectacular.
Yeah, so it's very interesting. So basically, these ketamine clinics can take people in basically for minimal or no cash out of their pocket.
Exactly.
Insurance covers. So I think that opens up the door to massive amount of business.
Exactly, we do too. And that's just going to be us. We're capitalizing the growth, and we're going to capitalize the marketing in a way that's very respectful and responsible to why people are coming. And we also work with Spravato. So the clinics have Spravato, which is the new S-ketamine by Johnson & Johnson, and that is also covered by insurance. So we have not only the ketamine infusions, but we have S-ketamine inhalable. So we have both mechanisms. I think some people like the infusion better because it has a more efficacious and longer effect, right? The spray is a bit lighter and less strong. So for people who, I like to say that it is a reset for your mind, right? If your computer stops working, just to gloss it over, if your computer goes to the blue screen of death, what do? You hit the reset, right? This is what's happening to people's brains. And this is what psychedelics can do for you, is they can give you a reset. If you read Michael Pollan's book, what he's saying is you're shutting down the default mode network for long enough for it to reboot, for you to see what you can't see when you're stuck in your ego and you're stuck in your default mode where you're just doing the exact same thing you did yesterday. And so it's what's so powerful and incredible. It's not just, oh, this is cool and you're going to make some money. You're actually transforming people's lives, which is amazing.
No, it's very interesting thing happening, because it's kind of like I don't want to get too, like, I know you're in California. I don't want to sound like too much of a yeah, but it's real. There's a transformation of the human consciousness. Kind of
it's like, look, Timothy Leary might have said that in 1960. He was a doctor, but he was also a little kooky. What's happened in the last 20 years is that you've had the largest medical universities in the United States sign on and say this is transformative. You've had the FDA grant breakthrough therapy, which is a designation that's given only one in hundreds of drugs to the last two psychedelic molecules that are going through stage 3 or late stage 2 trials. So you have not just some California crystal woo-woo stuff. You have like very hard science from some of the best research universities in the world saying it's unexplainable, but it changes lives. I had this conversation with a woman, probably shouldn't name because she runs the VA in a state back east, and she was telling me, look, when we do this work on veterans, we have about a 7, maybe a 6% efficacy per year. So somewhere between 6.5 and 7% of people are markedly better from their mental health issues per year. Now, what she said is when we did MDMA trials outside of this, we did it separate from the VA, but with these people, the efficacy rate rises to 70%. So 10x, more than 10x efficacy, which is insane, right? It's almost mind-boggling, but it works. And over a period of a year where people are reporting that they're not suicidal, that they're not in these crazy funks, that they can get out of bed, that they can deal with their their wife and their children, and the things are just incredible. So this is what I'm saying. It's not just some California woo-woo, go take your ayahuasca and do your yoga. There is a real scientific basis for all of this, all of these things. And look, as a cannabis person, what's happened is very interesting, because cannabis was off limits. Only one place in America could you get weed to do research, the University of Mississippi. And it was terrible weed, just awful. A friend of mine was a actual one of the 7 US patients who got it. That was the only research. And you couldn't get a DEA license to do cannabis research because they were trying to push it down, right? But in the interim, all of these giant research institutions have gotten MDMA, psilocybin, even some LSD. These novel compounds have been rigorously researched over the last 20 years. And what's come out is just incredible. So it's like you have more science. Look, I knew Charlotte from Charlotte's Web. I knew her mom. I saw the difference. I saw all of this in real time as the people were transformed and healed by cannabis as a healing therapeutic substance. But there wasn't great science. It was all done by my compatriots, by people kind of on the other side, just pushing it out there and trying it. With psychedelics, there's incredible, real deep science on how transformative it is. So that's what I think is it's such an incredible opportunity for people to be a part of. And this is what we're offering, is like an opportunity to ride what I think is a multi-billion-dollar wave.
Yeah, no, there's no question. This is going to be, psychedelics is going to be, the big theme. I think, there's, what's this guy's? There's a hedge fund guy he was very big in cannabis early on. He's been on this. No. I'm trying. The name will come to me, but okay. This is a massive theme. So let's look at the share structure. Like, how many shares are outstanding right now? Like fully diluted. What's in the float?
Fully diluted, 50 million shares. Super tight structure. Did it non-brokered. Brought it out. Came out at 20 cents. We're at 70 something right now. 3 months. Incredible. No junk on the shell. No, everything was done incredibly tight. All of us founders locked up for 3 years. No. I don't want to say bullshit. No bullshit. We've run this thing, having lived through the first cannabis boom. What I wanted to do,
learn the lessons.
Something. I didn't want to do the thing where you take all the value off the table before the deal comes off. I wanted everybody who comes in to participate in the upside. The structure we really did was we came out public with what we had, and using it as an acquisition corp. So not quite a SPAC because it already had a business and revenue, but and I think the ecosystem play that comes from the business that existed is really attractive to the companies that we're going to bring in, right? So it's more than just, hey, we have some capital, jump on the bandwagon. We have an incredible team. We have a platform with, hundreds of thousands of people looking at us. We have the ability to create and burnish brands, and we want to bring you in, company A, and we want to grow that business. And I think a person I mentioned before, Greg, who is one of our senior advisors, he's done this incredibly successfully in cannabis, and you'll see some of those deals come out in the next year or so at massive valuations, because what he does incredibly well is find cash flowing entrepreneurial businesses and then structure them and give them growth capital. And so that's really what we're doing here is finding great entrepreneurs and then blasting growth capital through it and owning the business, right?
How much? Okay, so how many shares are on the float right now?
I think it is 50 million is the total outstanding, and I think I want to say it's about 17 to 20 million shares that are floating in the original investment round. I got to do math. Hold on, doing math in my head. That seems about right.
Okay, and how much? So how much cash do you have right now? In how much cash is in the bank?
Somewhere in the $2+ million range, $2.5 million range, something like that.
Okay, and I'm assuming that, look, once there's liquidity, the stock starts moving. You could obviously, the market has a strong appetite. Let's just say the market has a strong.
The market has a very strong appetite
for psychedelics. I mean, we've seen companies raise a lot of money.
Yes, a bunch of my friends have raised a lot of money in the last month. So there's clearly a very strong demand for it. Yeah.
So so I think right now essentially is, the market right now is looking for Delic to get some traction, announce some deals, and I think the stock could start moving because I mean, the valuation is, I mean, it's actually cheap for the space. I mean, it's like
it really is.
It's like,
I would agree with you. I think we've kept it intentionally cheap because we want people to be able to participate in our upside with us. We want investors to really get rewarded for being part of it.
The existing business, the ketamine business that you have, the clinics. Again, how many clinics do you have right now with this?
There are 2 clinics operational, and we have we'll be announcing some more stuff shortly, I believe. So,
but you could open. How many do you think you can open? Let's call it this year.
I think this year we could probably open 6 to 8, and then
really? Okay.
Yeah, the team is really proficient at. That's what they've. As I said, they've opened 27 plus clinics. So this is why we did this, because they have shovel-ready plans to open a bunch more in a way that I think is really effective, accretive, and allows for kind of cross-platform cross-selling and bringing in a lot of great patients who need this help.
Okay, so really, if you have 6 or 8 clinics, I'm kind of gonna just throw out some. So in theory, you could exit this year with let's call it if they're doing $1 million each, you could be doing $8 million revenues with those. You have some other thing, right? So let's say you can come out of this year with a $10 million run rate, which is not a lot. I don't think it's difficult to do. I mean, do you think that you could achieve that?
I do. I mean, I don't want to say 1,000,000% we're going to be. It could be more than that, honestly, with the deals that we're looking at. But yeah, I think that's reasonable.
Okay, so 10 million run rate, and the market would value that at, oh my god, I mean, whatever it's.
There's no company in psychedelics doing anywhere near that number of revenue.
Yeah. So essentially, you're really trading at what is it, 50, 2x, 3x forward. What's going to be out there forward? It's a reasonable number, and just for context, High Times. How much was that doing in revenues? That was doing more than 10 million, right?
Yeah. Oh, yeah. I think when we last publicly disclosed it before I left, it was over 17 million. Okay,
that's a decent amount of cash.
Yeah, it's a real business, very real business.
So basically, it's a pretty compelling place to get into the stock right here. I mean, it's. Again, the psychedelic space, the valuation is cheap. There's near term, you have kind of this runway to get, real revenues from the clinic side, plus the other stuff you can do. And then there's the blue sky with, what you and your team, were betting. I mean, basically the audience is betting on you. Essentially, they're betting on Matt staying and the team.
Yeah, I think they're betting on the incredible people that we've brought around this that know exactly how to build great businesses and not we're not looking for short-term news flow kind of businesses. We're looking for long-term cash flowing, profit generating. We want to be a company that makes real EBIT going forward. We don't want to be something that's just trying to bolt on a bunch of stuff that doesn't make sense.
That's an important distinction, because I think that's an important takeaway. So investors understand that this is not like you're not just going to put a bunch of stuff together that's vague. There's a plan. There's a
very concrete kind of structure that we see working, that we've having done it before in cannabis and helped build a bunch of these billion-dollar brands. I know what we need to do, and I know there's multiple multi-billion-dollar addressable markets that we can have real positions in a couple of them, and it doesn't mean we have to own the entire market, but just having real positions will make some very real value for people who are in this.
Okay, Matt, I want to wrap up with 2 questions. One is, very important for investors to know. They want to know what is kind of what's in the pipeline in terms of news flow for the next, short term. What kind of milestones do you have? Like what are the catalysts right now for the next, let's call it, 8 weeks, 10 weeks?
Sure. We have a couple of deals that we're going to announce. Obviously, I can't say what they are or when, but shortly. One should be very good and very shortly. Another one probably the following week. A couple of other. I think there's a lot of really, the answer to this is I'm not sure what I'm allowed to say, so I don't want to say something that is incorrect, but there's a lot of really good news flow that's going to come out in the next 8 to 12 weeks. So, at least one great thing a week you can expect. And it's really, I think the opportunity is to be a part of that momentum.
Okay. So, bottom line, there's going to be news flow in the
Yes.
next 8 weeks.
For sure. And some great acquisitions and some really fun stuff that you'll get to see how we're growing and why.
Okay, because our micro cap investors are, our audience. They don't.
I think you hold me to my word. You have me back on here, and you say, "Wow, you did exactly what you said you were going to do." It's great.
That's what we need to have. Matt, last question. Our favorite question. In your opinion, top 3 reasons why investors should consider Delic right now.
I think we really have a great team, which we've talked about the entire time. I think we have a really tight float, a really cheap valuation. Well, that's already 3. But I think what we really bring people is an opportunity to participate in the business of psychedelics now, not in the long-term discovery of psychedelic drugs that might be multi-billion-dollar things in 4 to 5 years. And so I think if you're going to play the market, you have to play both sides. You have to play both the long-term drug discovery, and I think with us, you get the opportunity to play the short-term cash flowing business side. And that's, I think, a great opportunity, and not a lot of people are presenting.
Okay. Matt, on that note, I want to thank you, and we'll look forward to having you back on ASAP with a news update. ASAP meaning within 10 days.
Yep.
Would
love that.
Okay. It sounds like a promise. Right.
It is, for sure. I'll be back. Like Arnold Schwarzenegger. Okay.
Perfect. Like a fellow Californian. So, Matt, thank you. We look forward to hearing more, and we'll see everybody on the next live stream.
Thank you so much, Jack. Have a great day.